All right, guys, we are going to go over price action and market structure. Now, please pay attention to this section because this is the most important section you will ever see in your entire life. Price action and market structure is the foundation of everything we do as traders, and without it, we have nothing. So pay close attention. It's very, very, very important. Now, when it comes to price action, market structure, there's only two kinds of market structure, but they're both very important. We have bullish and bearish. There is a third, but it's that little gray zone where we don't trade it. We don't touch it. And that's called consolidation. Now, when we have a bullish market structure, which means we're moving to the upside, there's a couple things we want to look at, but the main one being very specific, okay? And that's higher highs followed by higher lows. I'm going to show you guys exactly what that looks like. So if I go over to my drawing tool, my brush tool, I'm going to show you this is the start, right? So what we have here is the foundation. It's where we start, and that's that support zone. From that support zone, we begin to push up to a higher high right here. We drop that leg to a lower low or a higher low, and then we go back up, higher high, and we drop back down to a higher low. Okay, this is called bullish market structure because we're going to the upside and we're creating a higher high followed by a higher low. Now, I'm not going to sit here and find the perfect example for you guys because there's no such thing as a perfect example. Some days are ugly, some days are beautiful. If it's extremely ugly and you can't really tell what's going on, we don't trade it. Patience is key in this industry. A lot of you guys don't have patience, but you're going to have to develop patience if you want to be successful. You can't get on here every day, even though the markets don't look good, and try to force a trade. It doesn't make any sense. There's times you're going to come on and market structure is just not there. You just don't trade. You're not going to make $1 million in your first week. It's slow and steady, but eventually you're going to compound big wins, get a bigger account, and start to make a lot of money. So just trust me when I say, do not overtrade. Do not force trades. Look for market structure first. So how do we know that this is a bullish market structure that is staying bullish? Well, as you can see, price created a higher high and then a higher low here. You see this level here? We did not break past the previous spot. So that previous higher high and higher low, we didn't break past that. Now, if price would have came down here and started to push down in this way, boom, that is now a lower low. Back up, lower high, back down, lower low, meaning we are now in a bearish market structure and price is no longer bullish. When we are in a bullish market structure, we are looking for buys. We want buying opportunities to the upside, okay? Because we're going to go with traffic. We don't want to go against traffic. We want to be with traffic. If traffic is moving up, we want to look for buy positions, right? We're going that way. Now, if we're dropping, and I'll show you an example in a second, we're looking for short positions. We want to sell, okay? Very, very, very important that you guys make sure that when you buy or you're longing, you're in a bullish market structure. When you're shorting, you're in a shorting market structure, which means a bearish market structure, okay? Now I want to show you guys an example of a bearish market structure. And again, they're not always perfect. It's not always just this beautiful, amazing setup, super clean. You know what it is. It doesn't happen like that. I wish it did, but it doesn't, okay? So first of all, we have to establish our main resistance, which is right here. Okay, now that we have our main resistance, we wait for that push to drop down. We have a lower low here, followed by a lower high, lower low, lower high, major drop for a lower low, right? Which drops into our zone here. But look at this. We started to push up, creating a higher high and a higher low, a higher high and a higher low. Market structure has changed. Now this happens every day. Market structure cannot stay bullish and it cannot stay bearish. It has, the best way to put it is it has stamina. Okay, picture a runner running miles and miles and miles. It has stamina. It's eventually going to die out. And when it does, it's going to switch the other way. Now, it doesn't always switch smoothly like this. Okay, sometimes it consolidates first. And I'll show you an example. As you can see right here, we create a beautiful support zone here. We push up, higher high, higher low, 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 higher high. Now from here, we didn't go into a bearish market structure. We went into our third type of market structure / price action. That is called consolidation. This is consolidation. Now, what that means is prices moving sideways. We're going up, down, up, down, up, down, up, down, up, down. We finally broke it here. As you can see, we break out of that zone. We consolidate a little more, and boom, we drop. So consolidation is going to happen. We do not trade consolidation. If the markets are consolidating, we stay out of the markets. And it's as simple as that. There's no reason to trade markets that are consolidating. We wait. Either price is going to fix itself, correct itself, get better looking, or we'll come back tomorrow. We'll try again. But we're not forcing things, guys. A lot of people like to force. You cannot force in this industry. You cannot. You're going to lose. We can't lose. Like we can't purposely go into the market knowing in our heads there's a chance we're going to lose because market structure is not nice. That should never happen. If you're going to lose, you're going to lose because market structure was perfect. You got in and you just happened to lose. But to get in when market structure is ugly, to look for sells while market structure is bullish, to look for buys when market structure is bearish, to get in while it's consolidating in general, you're setting yourself up for failure. We cannot do that. We have to stay consistent. We have to look for perfect market structure and only trade that structure. That's it. We don't get to just, hey, I really need rent money. I have no rent money. I have to trade it. I need to make money today. You're setting yourself up for failure psychologically and physically. You can't do that to yourself, guys. So make sure you follow the guidelines of basic market structure. And we're going to get into some more stuff. Support and resistance is very, very key as well with market structure. But guys, trust me when I say be patient. Patience is key in this industry, and you're going to find that out very, very fast. Here as well, support and resistance, okay? So when it comes to support and resistance, there's a lot of things we use it for. Whether it's the basis of where market structure is, like right here, as you can see, we create a nice support, and then we push up. Or if it's where we find our breakouts, support and resistance is very, very important for us. Now, for support, what does support mean? I want you guys to think of support as a floor that's unbreakable. That's what support is. I'm going to find a really good example to show you guys. As you can see right here, all of these wicks, all of these candles right here, they're stuck. They're physically stuck. We have 1 touch, 2 touch, 3, 4, 5, 6, 7 touches with those wicks to this support zone. Price can't break it. It's stuck. We've created support and now we're pushing away from it. That's support. Okay. Now with resistance, it's the same thing, but now we're looking at the upside of that. So as you can see, 1 touch, 2 touch, 3 touch, 4 touch, almost another touch there. This is resistance. Price, it can't break it. It just can't. What does that mean? It's resistance, but it also looks like a ceiling. Okay, so I like to call resistances ceilings, and I like to call support zones floors. So you're looking at floors and ceilings, and it really is that simple. Now you're going to see support and resistance a lot, but here's the key thing, right? We have support here. That's great. That's wonderful. But what happens to support, right? I mean, if we were to drag this to where we think its support is, right? We have 1, 2, 3, 4, 5 touches, 6, 7, 8 touches here. Then a break below. So price eventually did break that support, broke through that floor, but guess what support and resistance does? It turns into each other. So this support broke below, okay, I'm going to put this in replay mode to really show you guys, but it broke below just like this and came back up, retested that floor now as a ceiling. Okay, so support broke and then became resistance. So you see how that they can turn into each other, and they do very often. So there's a couple of things that I see here just from being a trader who's been doing this for a long time. I see a few things. I see price is bearish, right? Market structure is bearish. How do I know that? Well, if we go back to what we learned earlier, we know a couple of things. We know we have lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So market structure is bearish, which means we can look for sells. We can look for sell positions. Now we have support being broken to the downside, meaning there's two things going on right now. Market structure is bearish. We broke through a support, which means we're bearish because we're breaking out of a support zone. That's two things, but wait, there's a third. We now just retested as resistance. So we broke and then retested as resistance. So we have three key things right now telling us that we are going to the downside. This may be a good short position. It really might. It really might. If we go for like maybe a simple 1 to 3, you never know. You never know what might happen, but look at that. Just like that. Just like that. We could even went for a 1 to 5. What a move. But we just found a position. I'm not even at the point where I'm showing you guys how to find positions, and we're finding them on accident. Not only that, we're on the 5-minute time frame, which means we found that position in 20 minutes. This took 20 minutes to be a 1 to 5. That's massive. That's absolutely massive. And all we had to use was what you've learned so far. Market structure, price action, and support and resistance. We just used those three simple concepts to catch a 1 to 5. That easy. It is that easy. So when we go out now and we look for resistance, there's resistance everywhere, guys. Everywhere you're going to find resistance and support. It's so easy to find. Look at this. Look at that. We have all of these touches. 1, 2, 3. This is resistance. You can make this a little thicker because it's the whole thing, but this is resistance. Price can't break it. It's a ceiling. What else do we have? Oh, would you look at that? We have higher highs and higher lows. That tells us that we're in a bullish market structure. Look at that. Price is heading up. Beautiful, beautiful bearish market structure. We are heading up. Guys, we're not even in session. This is two examples that aren't even during New York session. And it's that beautiful. Imagine what you're going to find during New York session. So we have resistance here. Price breaks. It breaks that resistance again. Now we could wait for price to come up, come back down, and retest that resistance now as a support zone. And we could take another buy position right there. But we don't have to do that because we already know, right? We already know what? It's a bullish market structure and we're breaking out of our resistance. We don't need it to come back and retest. We know it's probably going to because price loves to do so. So as we start to break out, we can take our long position. We can have our stop loss below where it would come back to retest and go for another 1 to 5. Look at that. Look how beautiful that was. It broke out, broke that resistance. Market structure is bullish. We're trending to the upside. We came back and retested, created support. That's great. We already knew that would happen. That's why our stop loss is below that. But we hit a 1 to 5 again with a breakout, just like we did over here. Just like we did over here, using simple techniques, market structure, support and resistance, and the fact that price is breaking from those support and those resistances. That's unbelievable. That is unbelievable how easy it is. But trust me, guys, you're going to, but support and resistance is the foundation of most of it. You have to have support and resistance so that way we can have breakouts. Breakouts is how we trade. We watch price break. Okay, and it happens all the time. It's not just some random occurrence. All the time do we have resistance turning into support. Okay, you see it so, look at it, just as I'm sitting here drawing. Resistance, support. Resistance, now support. Resistance up here, we have support down here, a break and a retest of support into resistance. Price action is so beautiful. And if you use it properly, you're going to be a very profitable trader very fast. So let's keep support and resistance in the back of our minds as we go over our